Hello my friends traders, Carolina Lizan here, graduate student of the Grok Trade Mentoring Program. It is Monday, July 11th of 2011 and we're looking at the Q's daily chart. Hope you all had a wonderful weekend and you're all back in the game. So let's do some technical analysis here. Remember, as we talked about that high of 59.36 back on July 7th, and look what happened here. It was a Thursday, so we were making that high, and I was just really referring to the high of May 2nd, I believe it was, the 59.34 mark, so we busted through it, making a new high at the 59.36 mark, and then once we hit it, we closed the day below the high of May 2nd, which was an indication that we did not have enough power to break through it and continue to the upside before making a little bit of a pullback. And that's what happened here. And also, I didn't really like the MACD because it was slowing down a little bit and the volume was still kind of high, but not extremely high. So, yeah. So that's what happened here. We were trying to push it all the way up to the high on Friday, but we were not able to. And finally, we crashed down here, closing the day below all major areas of support on our way down here today. So we are finishing the day lower today, but check this out. Look what we are hitting here today. We are hitting the 8 moving average, which is my favorite one, and I love it, really. So we are hitting it and we are closing the day a little tiny above it. So, and also what we see here, we have another major area of support right here at the 57.97 mark, which is a major area of support. So we are still closing above it, so we could have a little bit of a bounce here tomorrow. But the other thing that could happen is we could break back down through that 57.97 mark to the downside, also breaking through the 8 moving average, which is again my favorite one, and I really would like you to watch it really closely and pay close attention to it. But we could break to another side of the trade and we could be and enter a bearish territory tomorrow if we ever break through the 57.97 mark as well as through the 8 moving average. So we could have some potential to the downside all the way down to the next area of support down below at the 57.20 mark. 57 actually, that is the 57.15 mark, and then the next one would be down below here, the 56.95 mark, which is another moving average, which is the 50-day moving average, which you see here in red. So that would be another stopping point if we ever get there. But the other thing that could happen is we could bounce off of the 8 moving average as well as the 57.97 mark and continue to the upside, breaking through the high of 59.36. So that would be another scenario here. And check this out. Look at the MACD. The MACD is confirming that down move. It is pointing lower. It's pointing towards the 0 line with a negative tick, which means that it's confirming it. And the volume, it's not really impressive. It's still below the average. So I would like to see it a little bit higher, but it's still kind of high. So yeah, it's fine, but I would like it to spike a little bit above the average. So that's what I want you to look for. Look for those spikes in volume here and the MACD pointing lower and lower if we ever go down. Alright, so hope it helps you. Have a wonderful day and I'll talk to you again tomorrow.